Hey there, pro traders, and welcome to our Monday market review being held by yours truly, Ian Giffen, on behalf of GoPro Trading Academy. So for me, last week was a little bit quiet, I must admit. Things seem to have really become quite subdued in the markets. End of a few trends, as we will see, and those that are still ongoing. It's really been pretty quiet overall. So not a lot of action in the markets for us at the moment. I'm not sure if this really is the start of the Northern Hemisphere holiday season. That is typically a quiet period for us in the markets, but it's a little bit early. That being said, halfway through July, maybe it's time for us to start thinking about whether that's going to have an effect or not. All right, so folks, if you're enjoying this material, as always, please make sure that you are subscribed to our channel. If you're watching it on YouTube, hit that notifications bell. And if you are getting this through the Forex Trader on Facebook, please make sure that you do follow our material and our page. We do bring out lots of free training, and certainly looking to ramp that up over the next quarter or two. The other thing that's really worth announcing at the moment is that we are doing a big price action training workshop next week. So if you haven't already subscribed for that, look for the link that we do have with our posts here or below the recording on YouTube. So make sure that you do click on that and subscribe to it. There will be recordings available for a limited period of time. However, you need to make sure that you are subscribed so that you can get access to those. All right, so let's jump straight into it. Here we've got the Euro USD on the weekly time frame, and you can see last week we did get a bearish continuation of that impulse wave that we've been looking at for a few weeks now. But it was not an impulse candle, and looking at it on the daily time frame, you'll see that really all the action was on Monday. After that, very little altogether. And as you can see on Friday, it started a retracement, and we are currently very much into that retracement today on the Monday. So waiting for that to come to an end. For those folks who are daily impulse traders, you looking for reversal on that. And if you're looking to jump in a little bit more aggressively on this, you might want to look down on the lower time frame, drop down to H4, and look to see if we get a change in cyclicity on this time frame, which would be more of a hybrid entry than anything else. Certainly you can look for that. You can see we are up against this dynamic resistance level on the H4 time frame, which often is in the area of the end of a phase 2 or retracement wave on the next higher time frame, in this case being daily. All right, so the cable, just looking at a weekly first, you'll notice that's a similar kind of picture. But the difference here is that we actually did get a breakdown in sequentiality of cyclicity. And the difference really was the close of the candle on Thursday. And this one you can see it looks like we're going to have this low ringed by the end of today. And that will confirm the end of that pretty weak bearish trend, it has to be said, on daily time frame. So there hasn't really been much for us to do there. Looking more interesting, of course, has been the dollar yen last week. Well, this is 1, 2, 3 for the 7th candle in a row. There has been a bit of a pause for thought with these very low action candles that we had up to a couple of weeks ago. But last week giving us a nice bullish impulse candle, showing a continuation of that impulse wave on the weekly time frame. And here it is on daily. So you can see that again, last week, Monday, gave us the breakout, and we did have a continuation of that throughout the rest of the week. But it does also look like we are currently in a retracement on that wave. So waiting for that to come to an end. But of course, if you're a daily impulse trader, then that's precisely the signal you're looking for. The last thing we need really, of course, is just that bullish impulse candle before you jump in on that one. And likewise, if you want to trade the lower time frames on this, and maybe you were last week already, there were a couple of opportunities. You do need to wait for the end of this retracement wave. And if you want to trade a hybrid on this, likewise, looking for a breakdown in the sequentiality of cyclicity there. So look out for that. All right, dollar Swiss, not so much. Here on weekly, you can see last week we just had a high test inverted hammer, and on the daily time frame, well inside of the HTC. The top of the channel has obviously now caught up with our price action, and you can see there's that breakdown in bullish cyclicity altogether. So back into a bit of a bearish market here, but that being said, it's bearish within the context of the range. So not touching that at the moment. And the same can be said for USD CAD. Last week, we did have an attempted breakout of the HTC channel. That resistance level still holding firm for now 2 weeks in a row, looking like this on the daily time frame. And yes, it did give us an outside close on Thursday, but Friday pulled straight back inside of that HTC channel, and again showing that bullish weakness. So sitting on our hands with that one as well. On the Aussie, last week's hammer candle, not really showing us much. We have been looking for some kind of a bearish continuation over here, but it really hasn't been giving us any joy. And on the daily time frame, you can see it's been very, very weak bearish cyclicity, which has now officially come to an end. Certainly close of Friday, ringing that low, and a confirmed breakdown in that bearish cyclicity, such as it was. So nothing really for us there either. And the same kind of picture for the Kiwi, even though it's outside of that previous waves price territory, it's been very weak for both of the last 2 weeks. And likewise, you can see that bearish cyclicity now officially over as of close of Friday. So another one where we're just waiting. So you can really see what I mean, where things really quietened down a lot. So moving on to the yen crosses, euro yen not showing us anything. Inside HTC, no valid patterns, inside bar for last week, and a bullish one at that. So really not interested in anything here at all. The yen has been very good to us for a lot of this year, but that's all come to an end. And you can see here on the GBP yen as well. I suppose we could update this. Certainly, probably just need to wait for the end of the week before we can update the cyclicity, but it does look like that low is also going to be ringed. But not that we care anyway. This is all very much stuck inside of the channels, and there's no valid patterns at all. Very, very weak price movement. Swiss yen, a little bit more action. Happy to say that the Swiss franc strength looked like it started coming through again through the course of last week. So anyone looking for the end of that retracement wave on a weekly, so that you can start jumping into a trade on the daily time frame. Well, if you're trading daily impulse, you're still waiting for a pullback. And a class 1 or class 2 W pattern. But if you're on the aggressive side, like trading the hybrids, you would have already jumped into this one at the open of the market on Thursday morning. So a nice little trade. We've actually done very well out of this currency pair over the last couple of months anyway. And we are into another bullish trade on this one as well. So as I say, daily impulse, you just need to be a bit more patient on that, as you need to have the reason to believe you back into the next impulse wave. Right, Cad Yen, nothing much going on this one. You can see here on the weekly time frame that we did have a bullish impulse candle, but at the same time, despite retesting that resistance level, we still need to wait for a breakout. And you can see how resistance still holding over here on the daily time frame, testing it again as we speak, but we need to wait and see what happens there. Aussie yen, well, both the Aussie and the Kiwi really doing very little at the moment. That's the weekly time frame. Here on daily, likewise, stuck inside of the channel, no valid patterns. And the Kiwi, likewise, even though we've got that bullish impulse candle on the weekly, stuck inside of the channel, no valid patterns. Right, so that's the end of the yen crosses. Looking at the euro crosses, euro GBP inside of the channel on the weekly, bit of a low test hammer candle there for last week. On the daily time frame, it did venture outside of the preceding support level for the HTC channel. We've updated it now with the breakdown in bearish cyclicity. So nothing doing here either. And Euro Swiss is probably one of the nicer looking pairs overall on the weekly time frame, with last week giving us a strong continuation candle on the weekly time frame. And you can see that this bearish trend is still intact. But throughout the course of last week, you could see that it did very little. Monday, we had a bearish continuation. Tuesday, Wednesday, Thursday, Friday, all basically going sideways. And now at the start of this week, the market pulling back. And if it closes here, back inside the HTC. So that preceding strength that you saw throughout this bearish trend over the last couple of weeks looks like that's coming to an end too. EuroCAD, likewise, the week before we did talk about the fact that we've got this bearish breakout. Last week didn't really follow through very much, as you can see with this this hammer candle on the weekly time frame. And here on the daily, looks like we might be getting a breakdown in that bearish cyclicity overall now, especially if today were to close like this with a bullish engulfing candle. But that being said, through the course of last week, if you were trading H4 Impulse, there were several opportunities over there. I think we had two, one winner, one loser. So overall, of course, with the winners being much bigger than the losers, that was profitable for us. So I'm sure you folks would have jumped all over that. Euro Aussie, nothing doing. Look at last week's candle, just a very small doji or spinning top. And you could see very much sideways here on the daily time frame. So really of no interest to us either on that or the Euro NZD, which shows a similar kind of picture, testing that support level. But really, if you look at these candles overall last week, not going anywhere. Right, so looking at our GBP crosses now, last week giving us a bit of a bearish candle. Now, the fact of the matter is we've had two inside bars or candles over the two preceding weeks. So that's not really a good sign. You can see that even through the course of just today on the weekly candle, it's showing that this market is pretty much going sideways here. And that is also very visible here on the daily time frame. So another one to stay away from. GBP CAD, maybe a little bit more bearish with last week's outside close, but really nothing significant again on the daily time frame. Even though we had a bearish breakout, it didn't last long with Thursday closing back inside of the channel, followed by Friday's inside bar. It really is just chaos at the moment. So it's a good time to be sitting on one's hands with most of these instruments. So GBP AUD last week, inverted hammer again. You know, here on a weekly time frame, this is very flat and deep inside of an HTC channel. Also, these candles, and this is something I've mentioned periodically in the past. You know, you can see when you've got a candle that's got these wicks and tails that are much bigger than the body of the candle, it's a sign that on the lower time frame you've got very messy price action. GBP NZD, last of the GBP crosses, same kind of picture. Very much sideways on weekly, and daily is just a mess, an absolute mess. So staying far away. Right, looking at our other crosses, CAD Swiss, also on weekly, inverted hammer on the weekly time frame, and on the daily time frame, it's still inside of the HDC, but of course, those of you who keeping an eye out for something to trade will notice that this is stacking up to be a class 1W pattern. So there may be some scope to trade this in a bullish direction if you're trading that more aggressive selection approach and only looking at patterns and ignoring the channels. Aussie Swiss here on weekly time frame, inside bar last week, bearish inside bar. Yes, it is a potential class 1M pattern on the weekly time frame, but again, inside of that HTC channel. And well, the daily time frame really tells a more accurate picture over here, where you can see through the course of last week, this was just going absolutely sideways. So at the moment, there's really nothing of interest for us at all. Aussie CAD, also terrible. Look at that, that hammer candle for last week, which here on the daily time frame really also shows that there was a breakdown in any kind of bearish cyclicity we had. And looks like it's forming a bit of a tight range there. So waiting for a breakout before we do anything on that currency pair. And Aussie Kiwi, weekly time frame, flat as a pancake. Nothing for us to do here at all. Kiwi Swiss, 2 weeks in a row, another 2 weeks with inside bars. And again, the daily time frame really tells the story. Nothing for us to do. And despite that that Swiss franc strength that we capitalized on up until a month or so ago. Right, Kiwi CAD also, two candles over here that really just show that support is holding strong. They're both bullish candles as well, as you can see. So definitely nothing for us to look at here on the daily time frame. That's a clear story as well. If you just look at last week's candles, yes, it did form a bit of a V pattern, but it respected that support level at the end of the day. Right, so that's the end of the currency pairs. Looking at something that showed a bit more action, of course, is gold, where we've had a third week being a bearish impulse candle. We had the breakout the previous week, as we know. So last week was just a bearish continuation for us. And looking at the daily time frame, for those folks who are looking to jump into a daily impulse, I'm pretty sure you would have done that last week, Tuesday. So that's still ongoing, a bit of a pullback. Well, last week, Friday, we had that inside bar, so very little happening on Friday. Bit of a pullback today, but no reason to think that this at this stage is not going to continue. So just follow your rules and you should be fine. Looking at our indices, also ignoring today, of course, because, well, this week, because the candle has only just opened. This is still technically bearish cyclicity, but it does look like it's coming to an end, especially with last week's low test, something of a hammer. So looking at the daily time frame, you can see we're stuck very much inside of a tight HDC channel. Let's see what happens here. This bearish, the momentum, we might call it, or the market sentiment looks like it's come to an end for now. So the market treading water for now, maybe even looking to start buying cheap. I think a lot of people are looking to try and get back in to the market at a cheap level with what most people would consider a discounted price across the indices at the moment. Although having said that, I think there's still a long way down for the market to go. All right, so similar picture obviously on the S&P. That's weekly. Let's just look at daily as well. Tight, a channel, no different really from the Dow, and of course NASDAQ, the same kind of picture, all following each other there. So just be careful if you do trade these, as always, to watch out for the correlation risk. Okay, so oil gave us another bearish candle last week. So the price of oil having come down a little bit further. So on the weekly time frame, still very much inside of the channel. But on the daily time frame, that bearish trend that we spoke about last week, as we mentioned, there was quite a lot of whipsaw the previous week. But what we did see last week was something of a bearish continuation. But by the end of the week, you could see it was showing weakness as well, with the market unable to close below that preceding low. So it does look like this bearish trend has come to an end, at least for the meantime. Which leads us with Bitcoin. Not much to show here on the weekly time frame. But if you look at it on daily, it does look like it has found support. And there is now the potential for the market to start moving back in a bullish direction again. I'm not in a hurry to jump back in on this at the moment. We still need to get some kind of a signal that we have got some kind of a resumption of a trend, be it bearish or bullish. I'm looking for a buy signal for actual physical, so to speak, Bitcoin. But at the moment, I'm still sitting on my hands for this one. All right, folks, so those are all the instruments that we normally look at. So I hope that's useful. As always, if you've got any questions for me, do post them in the comments below. I do answer all of them. And don't forget that we've got our advanced price action workshop coming up next week. So if you're keen to join us for that, make sure you click on the link below this, and I'll look forward to seeing you there. All right, folks, have a great week's trading. Sit in your hands if it carries on like this. But yeah, let's hope that we get a bit more action before the start of the holiday season. All right, folks, bye for now.